What's up, YouTube? Today I'm going to be sharing a bit of my development and the progress I'm seeing so far and the constraints. So I took 2 losing trades this week on Monday and on Tuesday, back-to-back losses. And the point of this video is to show you how I'm going to recover from that. What process am I going to take to get back to the right trading state of mind? Because those losses were not ordinary losses. They were impulsive trades, they were not high probability, and they were just based off of impulsive overtrading, the urge to make money and just having no control. So I'm titling this video Developing Patience in Trading ICT Concepts the Right Way, because patience is what I need, or what anybody facing impulsive overtrading is going to need. Now, ICT gave his 2 cents on this topic. He said, you need a model. Sticking to the rules of a model is going to solve overtrading and impulsive overtrading. In this case, I'm choosing the New York ATM model, and for the whole of today, I'm going to show you a breakdown of my thought process interpreting this model. So I've taken 2 lessons at the beginning of this week. Remember, impulsive trades, I'm done for the week already in the red, and I'm going to do things like reviewing the last 3 months of trading, which I've done. I'm going to bring my mindset back to the right state of mind for trading, and the way I'm going to do that practically is going to be through looking at the charts throughout the week, just bringing it, just journaling my expectations as you see in the video. So this is how you overcome impulsive trading, overtrading. So let's get into it step by step. So just so you get the understanding of what the New York ATM model is, this is an example of that model. All it has is a couple of rules. So you just mark out the lowest low after 7 a.m. and highest high after 7 a.m. I'm marking that as pre-market high and pre-market low. And now when price attacks any of those liquidity pools, you attack the other one. So if you see the high attack, you're attacking the pre-market low. So you're trying to get short, targeting it. This is just an example. It's a random example from a random day of me doing just that. So in this case, you also have to I've mentioned the pre-market high and pre-market low. You also have to take into consideration the opening prices. So mean opening price and 8:30 opening price, Eastern Standard Time times. Those are the prices I'm taking note of. And when prices are above those prices, you're in a premium market and you should be shorting. When prices below those prices, you're in a discount market and you should be longing. So when pre-market high is taken, for instance, and we are above 8:30 and above mean opening price, that's good for sales, especially if it aligns now with higher time frame narrative. But you could just trade the model without higher time frame narrative as well, but that'll be lower probability. So now that you understand the model, simply if you take one side, you attack the next side. If it's in line with the narrative, higher probability. If it is a short above midnight and 8:30 opening price, higher probability as well. So this example, I can take it off and out of the way. Okay, so for today's price action, I'll just run through the narrative briefly. So we have a weekly time frame. This is a weekly chart. You can see my draw on liquidity is way down here. I'm expecting bearishness, so I want to see the weekly buy side imbalances and efficiency get traded too. I have buy side liquidity here, just above it. I have this buy side imbalances and efficiency on the weekly chart. I'm noting its constant encroachment and its lower quadrant. That's all. And I'm noting the previous lows from this swing low and this low. It has been rated before today, but I'm still taking into consideration while going into the session. While going into the session, you can see the price is trading at 28,883 and half. So I'm moving down to the daily chart. On the daily time frame, you can see the arrays. I have this inverted volume imbalance, and then you can see the arrays from the weekly chart as well. I'd have this noted as a daily inverted fair value gap, but it's actually a daily BC. When price inverts it, it will become inverted, but I'm anticipating that inversion, so I'm labeling it as daily inverted fair value gap because I'm bearish, looking for lower prices to draw to this weekly objective. And for resistance, we saw price reject the lower portion of this week. Lower quadrant got rejected, and today this is how we look at the open. So this is just around the open. This is how price is looking like on the daily time frame. And my commentary is simple. I'm saying I'm bearish. I'm looking for previous day's low, but that will be if we're able to trade through the midpoint of this week on the 1 hour time from the closing basis. That'll be brilliant for lower prices. Okay, so moving on, this is the 15-minute time frame. On the 15-minute time frame, I'm bringing attention to this array. So this is a 1 hour premium wick and a 1 hour rejection block. Those are the two main things I was looking at when I saw this reaction here. So I'm looking at the bodies on a certain 1 hour rejection block and a 1 hour premium wick. It's possible to see lower prices from there, even though we've taken London session high and of course we're in a rejection block. But trading just below a pool of liquidity like this one is not ideal. These are relatively equal highs. So a shorting before those are swept is low probability and should be done with half risk. And you see that in a minute when I go to the 1 minute time frame. But from here, you can see it's very possible that we trade up and take out this buy side liquidity pool here before moving lower. And mind you, a very serious nugget here is that the 4 hour CB low, which is the high here, which is buy side liquidity, if we tag that, we're going to form an institutional order for entry on the 4 hour time frame. So that's brilliant. That will be very insightful for lower prices, and we should see some speed moving lower if that occurs. And you see the outcome. I'm going to the 5 minute time frame where I'm showing you this in engulfing candle. So this current candle engulfs this, and I'm saying, should this engulfing be successful, high probability shorts will be in play. And eventually this engulfing actually gets successful, and we'll see the shorts that played out, but inevitably we reject those shorts and attack this 4 hour CB low before eventually rolling lower. So here I was looking for this after seeing the engulfing. I was looking for pre-market lows, but specifically the New York PM low. So it would be very nice to see a total soup of the New York PM high from yesterday and see a run to New York PM low. This is 15-minute time from regular trading hours. So let's move on. We can look at how that move played out. So I was looking for those shots. Now we actually see something else. Shots don't play out immediately. What occurs here is actually a rally to the entry. So hypothetically I would have been short, and I'm not seeing that in the momental, so I'm saying I'll be short here. And then we see a shift in the structure lower, but then reject it. Look at the bodies, look at the wicks, and this is actually coming off a 15-minute fair value gap. So price is dipping into that fair value gap and rejecting it, going higher. Where is it going to? It's going to the buy side liquidity that we mentioned on 4 hour BC low. So within this period, I'm being patient. I'm looking at what is happening in the narrative, going through the algorithmic delivery, checking the different time frames and seeing the price delivery continuing to replay out. And that's how I see this move going up to daily BC low. There's also a 15-minute array above that. It's a CB. But my idea is I'm trying to build discipline. I'm trying to build patience. So longing this after hypothetically being short is unwise, because we're looking for the high probability move, right? So we're looking for a move in line with the model. Seeing through all of this builds patience. It builds the personality needed, the patience needed to wait for a high probability setup. And you see me note something like that because when I was looking at this going up, knowing very well that's going here, the impulses to get in started playing up in my psyche, and I had a mental note of that. I'll show you that next. But just before, let me show you the imbalance the bias and balancing efficiency from which we're reacting on the 15-minute. So this is a 15-minute chart. What you saw there was this. It was an institutional order full entry drill of this array and pushing higher. So these two arrays get invalidated, and I'm going to take them off now. And from there, we'll look at how price trades to the 4-hour CB low. It does not trade up to here. And then we see 5-minute confirmation bearish in the form of a market structure shift, which we love. And we're going to be targeting pre-market lows as the drawn liquidity. Okay, we're on the 1-minute time frame. We've hit that level, 4-hour CB low tag. Now you see price breaking down. Just to refresh, the model is simple. Pre-market highs have been taken. Want to look for bearish trades above midnight open and above 8:30 open, which is even lower. Targeting the sell side liquidity that we mentioned at previous week's low and pre-market low. That's the model, as simple as it gets, and it's actually in line with the higher time frame narrative, as you can see me do the top-down analysis that I did at the beginning of this video. So this is what I was talking about when I said I had the impulse to go long, because I was sure it's going higher for these two levels. And you see, this is what I'm annotating here. I get the impulse saying, okay, just take this long and catch some few pips. That's a low probability trade by default, and that is the cause of most of losses we take, most of the tilt. In my own personal experience, that leads me to tilt. The moment I start saying, okay, I'm going to take this long, I'm going to take this small scalp, that brings the gambler into the mix. It brings a caveman mind, because you go through stress. If I would have gotten long here, probably I would have showed my stop, and I should have gotten stopped out. If I got stopped out, that now leads to revenge trading, and it just leads to tilt. That's why I was making a mental note of how I felt here, and I was saying that these are the sort of low probability trades that I could take to begin going on tilt. So I anticipate price running to the 15-minute fair value gap before shorts. That's a possibility. But that does not mean I need to trade that level. I don't need to trade to that level, rather. I could wait for it and then take a higher probability trade in line with my model and in line with the higher narrative to go lower. You see? So I'm saying with such low probability scalp above all the opens, far and premium, that is the opposite of a high probability trade. It's so low probability, and these are the trades that get us most of the time with the fear of missing out on this move higher. Okay, now I'm going down to, I'm on a 1-minute time frame. I'm going to show you this. This is the 5-minute market structure shift. So we have an internal total sweep here. After sweeping both Asian highs and that 4-hour low, this one, the 4-hour CB low, we've swept those two levels, and now we're seeing price displace lower, creating a 5-minute market structure shift. That's confirmation to me right there. Remember, I'm not trading, I'm done for the week. I'm just deep reading and getting a build of patience. So I see this, I'm not taking any trades like this retracement here. Some people say, okay, that is whatever. I'm not taking that. Some will say this, all I'm looking for is a 5-minute market structure shift. Those are the rules of the model. 5-minute market structure shift is clear, and from there the range is from this low to that high at that point in time, and we see a retracement to this fair value gap, which is also in line with this consecutive upwards candles, and it is at the 50% of this dealing range from high to low, and that's where I think a shorting idea will be. And I say I'm shorting at the reversal macro. The reversal macro is a pair between 10.50 and 11.10. We are about to enter it. If you look at this, the time currently is somewhere around 10, just before 10.50, because this is 10.45, this is 11 o'clock. So we're entering that hour, we're hitting 10.50 here. So So this was about 1048 or so, 47, something of that sort. And I'm shorting in the macro right now, and I'm looking for displacement lower. That takes mean opening price, inverts this as well, sweeps sell side, sweeps sell side. I'm looking for this previous week's low to be hit and pre-market lows. And most importantly, I'm looking for this right here. That's a gem. Okay, we'll see displacement lower. The first sell side liquidity pool is raided. Next one is in sight. This move is with a very large stop, very generous stop. I get very little drawdown. This is not a trade, this is just a tape read of the ideas I'm seeing real time while engaging price, not engaging, studying price. So from there, I'm waiting to see this sell side hit. This is 475 handles worth of profit range with almost 100 handle stop loss. Based on the structure, don't look at those figures. Based on the structure, one micro here will do very well with very good risk management, even on prop firms. Now this sell side liquidity pool has been hit, and we're retracing. We're retracing to this inefficiency here, and I'm saying I'm curious to see if we have enough strength to trade to right here. I'm saying I'm curious if we have enough strength to trade to the midnight open, and I want to see how we treat it when we get there, if we get there. And if we don't get there, that's bearish. That means we're really heavy and we're going to push lower with some impulsiveness. And on the next slide, you see that fair value gap. I've annotated it out, and let me just zoom in so you see where we stand concerning the expectations to hit midnight open. You see we don't hit it. We get so close to it, but we don't touch it. We touch the low of this inverted order block, and boom, we displace lower. This is the speed I was talking about if we're not able to touch midnight opening price. From there, the opening range lows are taken, and the next objective is going to be 8:30 open and the New York PM low. In addition with this sell side at pre-market low, that's the terminus of the terminus. So I do not take a screenshot of that apparently. Okay, here it is. So this is a screenshot of me. We're hitting pre-market lows, as you can see. That have been hit here as well. Pre-market lows have been hit, and that's the terminus on the trade. I'm bringing a few things to your attention. The drawn liquidity hit. I'm also bringing in the potential break-even trade that would have happened here. So we saw a 5-minute engulfing M5 ENG. That's what confirmed here, and it looked probable. There were two arrays there, one arrays, so that could be a possible BE, but it should have been holding half risks given that there was buy side liquidity just above. At a high level, we should just avoid this entirely and wait for the raid. But Nasdaq be crazy these days when it concerns selling. Then I'm bringing attention to this as well. So it fails to trade to the 15-minute value gap, and we see a 5-minute market structure shift, and that confirms the model going lower. And from there, I'm saying you should notice price showing a weakness, unable to touch main opening price. And there we see terminus is hit at that level, and I'm not requiring pre-market lows. The rules of the model are calling for this as a drawn liquidity or profits, but this is a way more important pool of liquidity and it's stacked. So that's basically what I did today during the New York AM session. It was brilliant, and I hope the video has been insightful to show you the approach I'm taking to bring my mental state back to where it's going to be or where it needs to be for proper trading. So I'll see you in the next video. Yeah, okay.